I'm Amy Anderson for OptionRally TV. OptionRally would like to wish you and your loved ones a wonderful holiday season. Now let's take a look at today's market highlights for December 19th, 2013. Feds taper by $10 billion. Bitcoin in trouble with China. And lastly, the stock markets hit record highs. Let's take a quick look at what is happening in the global markets. Bitcoin is once again in the headlines after China's central bank was hacked yesterday. The hacking is suspected to be payback for China's hardline on Bitcoin. The PBOC and several top regulatory agencies warned in a joint statement that Bitcoin is not a real currency and that Chinese financial institutions and payment processors shouldn't handle Bitcoin transactions. The central bank also met on Monday with several third-party payment processors and ordered them not to provide service for the Bitcoin exchanges, according to China News Service. The Fed announced a $10 billion tapering, meeting the hopes of many investors. The statement that accompanied the release said the jobs market was improving faster than expected, along with an upward revision of growth for 2013. The Fed painted a rosy picture of the U.S. economic recovery, with the only expectation being the housing market, which is still lagging behind but steadily improving. The Dow Jones soared 297.59 points to 16,172.85 points, while the S&P 500 jumped 30.06 points to 1811.06 points, and both were records. In the foreign exchange market, the U.S. dollar rallied above 104 yen after the Federal Reserve said it would slow the rate of its monetary stimulus by $10 billion starting in January. The dollar, which compares the U.S. currency with 6 rivals, rose to 80.477. The pound sterling rallied to 1.6398. A report released during the day showed that the UK's unemployment rate unexpectedly dropped to 7.4% in October, approaching the 7% threshold set by the Bank of England for when it could consider raising the interest rates. Moving to commodities, market response to the Fed's tapering decision eased gold down, falling this morning by $14.80 to trade at $1220.20. Gold is a hedge against mismanagement of currency, and if the Federal Reserve is perceived to be doing a good job, then demand for gold will diminish. Today's announcement from the Fed is a welcome reflection of improved economic conditions in the U.S., said World Gold Council's William Ryan. We believe market participants will focus on the underlying fundamentals of supply and demand, which remain positive. Crude was little changed from where it was ahead of the Fed announcement to settle at $97.80. The EIA reported that crude supplies fell by 2.9 million barrels for the week ended December 13th. Analysts polled were looking for a decline of 4 million barrels. I'm Amy Anderson. Follow me Monday through Friday right here on my channel at OptionRally.com and on my Facebook page. Have a great trading day and a wonderful holiday season.